So welcome everybody to the Texas REIAs, the largest by far network of real estate investor associations across the great state of Texas, with branches all across the state: Austin, Dallas, Houston, San Antonio, over 100,000 members. I'm Phil Grove, one of the co-founders here at the REIA. This REIA has been around since 2003, going on 20 years now. And we provide resources, including training and tools and even market data to the members of this community. A lot of new faces here, so welcome for you guys that are kind of checking out the REIA. And let's start with our market update. And you know, here's the thing: what's the big story right now in real estate? Interest rates. I heard somebody say interest rates. So interest rates, they've changed, right? Interest rates. So what do you think about interest rates? What would you say about interest rates? Interest rates are what? High? Who thinks interest rates are high? Raise your hand if you think interest rates are high. Who thinks interest rates are low? Wow, so we got a bunch of highs and not a lot of lows. But a lot of you didn't vote, so I think you're afraid to vote. You know, I am a full cycle investor. I've been doing this for 20 years, started in 2003. And most of the rental properties that I own, when I started buying rental properties in 2003, 4, 5, 6.5%, 7.5% mortgages. That's pretty much most of the mortgages I still have on that rental portfolio. I would say interest rates are normal. This is normal. It's not high, it's not low, it's just normal. If you go back 50 years and you look at interest rates up and down, this is what we call normal, folks. Now, for a brief period of time, we had freakishly once in a 1,000-year abnormal interest rates. 3, 4, 5%, that's not normal. That's freakishly abnormal, right? You're gonna have to go back 50 years to have seen that before. I doubt you'll ever see that again in your lifetime. So if you're waiting for that to get back to 5 or 3%, yeah, good luck with that. Maybe in the next life, maybe, I don't know. I wouldn't bet on it. This is normal. You know, I bought a house. I wasn't a real estate investor, but way back in 1981, when I graduated from college, I actually bought my very first house. And do you know what interest rates got up to in 1981? Anybody want to guess? 40 years ago. Yeah, 18%. You guys are complaining about a 7.5% mortgage. Give me a break. Interest rates in 1981 got all the way up to 18%. You know, so depending on your perspective, interest rates are cheap. Are you kidding me? Now, everybody that got a house over the last 2 or 3 years is like, oh, interest rates are high, right? You know, somebody's been doing it for 20 years, interest rates are normal, right? Now, if I really think back, you know, interest rates are kind of low. And it's all perspective. Now, that being said, you know, when interest rates go up, what happens to home prices? Who thinks they go up? Who thinks they go down? Okay, you're all wrong. They go like this. They go up and down. Interest rates have both upward and downward pressure on home prices. Right? They're pushing it up and they're pushing it down at the same time. I mean, interest rates, high interest rates come from what? Inflation, right? You know, in real estate, we have another word for inflation. You know what I call inflation? Most people, they talk about inflation, they always talk about it like in derogatory terms, right? Inflation is bad. I disagree. I love inflation. I just have another name for it. I call it appreciation. Yeah. When all of your wealth is in real estate, we go to bed hoping for more inflation, appreciation, right? It's the same thing, right? So yeah, everything's more expensive, including real estate. Now, that being said, you know, yeah, houses are more expensive, mortgages are more expensive. And I got to tell you, here's the thing that drives real estate. Real estate really doesn't care about the economy. Real estate doesn't really care about interest rates. You know what real estate cares about? Supply and demand. It is the purest market in the world, supply and demand. That's what it cares about. You know, like the economy. During the Great Depression, the Great freaking Depression, real estate prices went down. During the Great Depression, real estate prices went down a whopping 6%. Nothing. During the Great Pandemic, another 1 in a 100-year thing, right? Real estate prices went up 30%. It's not the economy, right? It's supply and demand. Now, 2008, we had a very interesting thing happen, big market cycle. 2002, 3, 4, 5, 6. Banks came up with this idea. They called it subprime lending. Instead of requiring people to have jobs and credit and income in order to get a mortgage, you had to fog a mirror held under your nose to get a mortgage. That was the loan application, right? And in 2007 and 8, all the banks went bankrupt. Surprise, surprise. It was a really dumb idea, like phenomenally dumb idea, right? There's no hope that that was going to work. So 2, 3, 4, 5, 6, money is free and easy. Anybody could borrow as much money as they want. Builders were building at astronomical rates. We're building more houses than we ever built before. And what were we doing? All that supply, people were sucking it up, right? People were buying, because anybody could get a loan. Everybody got a loan. Everybody got a loan. Whether they had money, job, it doesn't matter, right? State income, you just say you could pay us back and you get the loan, right? And then in 2008, the thing just stopped. Lending stopped. It didn't slow down, it stopped. All the banks went bankrupt. Do you know the government actually changed the definition of bankruptcy in 2008? All that mark-to-market stuff, that was really just playing with the definition. But by any reasonable definition that somebody would say, what is bankrupt? They were bankrupt. And the banks eventually got bailed out. And eventually they got back into the lending business. But what happened in 2008, lending just stopped. It hit a wall and it just stopped. So we had this mountain of supply and the buyers just disappeared like that. No more demand. And when you have tons of supply and no more demand, what happens? Crash. And that's what happened. Market crash. Now, where are we today? Right? Ever since 2008, lending's never been as easy as it used to be. Interest rates did get lower, but it was still hard to get loans. Right? So we never had and building is it's cheap money. We've had a lot more building, so there is a lot more supply. But the demand is also strong. The economy is doing pretty well. So inflation is pushing prices up. And on a national basis, we actually have a housing shortage. Did you guys know that? We have 6 million fewer houses than we have people that need a place to live. So we have on a national basis, we have a pretty big housing shortage. And when you have a housing shortage, that causes prices to skyrocket, to go up. But then we have this other thing, higher interest rates. Because the interest rates have shot up, the number of people that can afford to buy a house has gone down, so the demand has gone down. So that's pushing prices down, and other things are pushing prices up, right? And when you put all that in a blender and push the button to see what's the answer is the market's flat. It's just flat. It's not really going up much, it's not really going down much. So if you take a look, and we'll dive into the different cities, but if you take a look at all of Texas, prices in Texas are down a whopping 1%. It's flat. Now the sales volume is down. There are less buyers and there are less sellers. So there's less houses being bought and sold. And the mix has totally changed. That's the other thing that's really interesting. Here's another thing that's affecting home prices. All the people that got a loan over the last several years, 3, 4, 5% loan, they're not selling. Nobody wants to sell. Normally, when you look at the houses for sale, 2/3 of the houses that are selling are resale houses, and about 1/3 of the houses selling are new houses. That's the normal mix. Right now, it's inverted. 2/3 of the houses selling are new houses because the builders are selling. They don't want to keep them, but the existing homeowners are not selling because they know if they sell their house, right, that's got the 2, 3, 4, whatever percent mortgage, right, or 4 or 5% mortgage, they're going to have to buy a new house, and then they're going to get a 7.5% mortgage. So nobody wants to sell. I'm exaggerating a little bit. And because nobody wants to sell, there's a constriction of supply, which is keeping prices elevated, even though there's a reduction in demand. Right? And again, you kind of put that all in a blender, and the market is flat. What's it going to do? I don't know. And by the way, we're not here to sell you anything. I don't really have some motive to tell you the prices are going up or down. I'm not like a realtor. I don't represent the National Board of Realtors. I can make money in up markets and down markets and sideways markets. Sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. It's never easy to buy and easy to sell. I'm kind of excited it's getting a little easier to buy because that's been a little harder to do because there's a little more Supply is getting a little easier to buy. You know, I don't care. I do care, but I mean, I don't have some kind of a motivation that's trying to get me to convince you the market's going up or down or sideways, right? I mean, maybe if I was the National Board of Realtors, I'd say the market's going to go up, right? Because they're always saying the market's going up no matter what it's doing. I'm saying the market's flat. And if you want me to put on my best guesstimate, and we've been doing this for a long time, it's going to stay flat because there's nothing to move it. You know, I said most of the houses being sold are new construction. Well, there's a problem. Because money's gotten harder to get and more expensive, the builders are slowing down. Eventually, that new construction, they're going to run out of new construction. And when they run out of new construction, there's going to be an even bigger housing shortage. When there's a housing shortage, that pushes prices up. Now, what's interest rates going to do? I don't know, right? I mean, you can ask all kinds of gurus about what interest rates are going to do. A lot of people think they're probably going to stay flat. They may go up one more time and then start to ease. Or a lot of people are now saying they're probably going to stay level and then gradually start to level back down a little bit towards the end of 2024. I don't know, right? I mean, that's crystal ball stuff. I mean, I could tell you my guess, but probably they're not going to go up anymore or much more, and they'll probably eventually start to go down a little bit. I don't think we're ever going to get 3% mortgages again. I don't ever expect that again, but we'll probably get down to 6 or whatever. And when that happens, now if you kind of take a guess, we're probably going to have demand go back up again. We have a growing housing shortage, and supply is going to start to shrink. And if demand starts to go up again and supply starts to shrink, you know, I don't know. That means, you know, maybe we're going to get another price hike in another year. Hard to say. But that's kind of our best guess, right? You know, it's going up, it's going down, it's flat. And Texas is about as flat as a pancake in terms of the market. This is an interesting chart of interest rates versus home prices, going all the way back to 1975. From 1975 to 1981, there it is. Interest rates, mortgages got all the way up to 18%. And when interest rates went up, what happened to home prices? Yeah, they went up. And when interest rates came down, what happened to home prices? Yeah, they went up. And when interest rates went up and down, up and down, up and down, what happened to home prices? They went up. Now, there's little cycles in here for sure, but there's not much correlation, right? Instantaneous correlation between interest rates and home prices, because it's really supply and demand. If you want to predict the future of real estate, you look at supply and demand. And I got to tell you, trying to predict the stock market, impossible. I don't care how smart you are. I don't believe anybody can predict the stock market. Trying to predict the economy, I don't know if anybody can really do that. It's pretty much impossible. Trying to predict real estate, not that hard. And the reason it's not that hard, it's not like you have to be really smart. It's like we know how many people are having babies. We know how many people are moving to Texas. I mean, we know. We know how many housing starts there are. We know how many houses we got. We know how many we're building. We know how many we need. I mean, we know all of that. All the variables that determine supply and demand, they're all known. Now, we don't exactly know the interest rate, so that'll be a little bit of a variable. But it's not that hard, right, to look at all of those variables and get a pretty good guess as to what's going to happen. And that's why I say, based on what we're seeing, we don't see any big movement. There's no big thing. Now, don't get me wrong, right? Somebody drops a nuclear bomb somewhere, all bets are off, right? But shy of something like that, we don't see much going on. This is Texas. Let me go through Texas and then the individual cities. Average sales price across the state of Texas is actually up 2%, up a little bit. The median price is flat. So I said year to date it's down 1%. This is the more updated chart. Months of inventory, this is what I look at more than anything else. Months of inventory, what does that mean? There's a couple ways to look at months of inventory. One way to look at it is if we stopped adding any more houses for sale, if we just, whatever's for sale, we're going to sell that, we're not going to add any more. How long would it last? And the answer is 3.7 months. We got 3.7 months of inventory. Now, to put that in perspective, let me put that in perspective. They say that when there's less than 6 months of inventory, you have a seller's market. When there's more than 6 months of inventory, you have a buyer's market. When there's right around 6 months of inventory, you have a neutral market. We have a strong seller's market. So anybody thinks the market's weak? No, actually, by any historical standards, 3.7 months of inventory, that's actually a pretty strong seller's market. Now, it's not as strong as it was last year. Last year is 2.7 months of inventory. Crazy strong. So we're not as strong, but we're still, by any historical standard, pretty strong market. Closed sales down a little bit. Like I said, the total number of sales bought and sold is down. Pending sales, what does this say? It's down a little bit. Active listings is up a little bit, and that's why we have a little bit more inventory. Now, to go back over the last 3 years, 2021 prices in Texas were up 18%, 2022 up another 10 to 11%, 2023 median price down 0.4%, so flat. Let's dive into some of the cities. Houston, here we are in Houston. Okay, Houston, the second most affordable city in Texas. Average price, $417,000, up 1%. Median price down 2%. So again, pretty much flat. Months of inventory about like the state, 3.5 months of inventory. Closed sales down a little bit, but not much. Only down about 11%. Active listings up, but not much, right? Up maybe 14%. Pending sales, that's kind of interesting, is actually up. So pending sales is actually up 1%. So that's kind of a what's on the horizon. Dallas, this is Dallas. Dallas average sales price, what does that say? 500 and, I can't read that, 550, 501, up 4%. And then median price is flat, 400,000 flat. So let me tell you something about Dallas. I don't know why, I've never figured this out, but for 20 years, Dallas has been the bellwether of Texas. I don't know why. But if you want to guess what's going to happen in one of the other major cities in Texas, you look at Dallas. And Dallas is always 3, 4, 5 months ahead. I don't know why. I've never figured out why, but they're always the bellwether. You look at inventory, you look at condos. We call condos the canary in the coal mine. First thing to go, last thing to come back. Okay, so if you really want to know what's going to happen in housing inventory, you look at condo inventory. And if you want to look at what's going to happen in one city, you look at in Dallas. For some reason, Dallas is always the bellwether, and I don't know why. But something kind of interesting is happening in Dallas. Months of inventory is falling, right? Falling months of inventory, 2.8 months of inventory. It's really strong seller's market. Total sales is down, but not much, down 13%. Active listings up, but just a little bit, 5%. Pending sales down, but not much, again, 12%. Now, the last 3 years in Dallas, in 2021, Dallas prices were up 20%, right? And then they went up another 15%. In 2023, they're flat. So that's Dallas. Okay, Austin. Austin, the average sales price in Austin is, what is that, $582,000. That is not a typographical error. And we did a little research on Austin, like where did the name come from? It turns out Austin is actually Latin for San Francisco. Yeah, it's the San Francisco of Texas. And it pretty much is. You know, Elon Musk and all the high-tech companies are all moving to Austin and bringing a bunch of high-income workers with them, and it's really jacked up the price of real estate. Now, Austin's a little bit of an anomaly compared to all the other major cities, so we'll talk about that in a minute. But the average price is down 2%. Median price is actually down 4%. Months of inventory, 4. And here's what happened in Austin. And the actual year-to-date sales price is down 9%. So Austin has the only city that has really a difference, like not flat, in the average sales price. And here's what happened in Austin. In 2021, Austin went up 30% in 1 year. 30% in 1 year. And the months of inventory, to just give you some perspective, was 0.4 months of inventory. That's less than 2 weeks. Here's what was going on in Austin in 2021. Somebody would put a house on the market, they'd get 11 offers in a weekend. And what would happen is these people from California come in, they make an offer on a house, they get outbid. They make an offer on another house, they get outbid. They make an offer on another house, they get outbid. And then they get so mad, they would start screaming at the realtor, just bid whatever you have to buy. I'm not going to get outbid again. I got to have a place to live. And they were literally buying houses for above appraised value and just bringing extra money to the table. I mean, it was that much of a buying frenzy. I've never seen a market that has 0.4 months of inventory. I mean, literally, if you stopped adding houses to the market, we'd be done in less than 2 weeks. I mean, that's how, and average, everything was just selling in a weekend, right? So it was a crazy, insane market. And it went up 30% in 1 year. Next year, it went up another 10%. And then the next year, it's down 9%. So if you look at the average of 3 years, it's up 30%. But it was 30, 10, and then minus 10, right? So it's the same for 3 years. Now, depending on your perspective, remember perspective? If you bought a house a year ago in Austin, it's down. If you bought a house 3 years ago in Austin, it's way up, right? Just like Dallas and Houston, but that's just perspective. But there was something unique about the Austin market. San Antonio, the most affordable market in Texas, average price $385, flat. Median price down a little bit. Months of inventory, 4.3 months of inventory. I think that's one of the higher months of inventory. The sales down a little bit. Closed sales is down a little bit. Now, they had the smallest run up in prices. They were up 16% in 2021, another 12% in 2022, and basically down 1% or flat in 2023. So that's kind of what's going on in the marketplace. And